Hello, everyone. My name is Chad Hart. I'm Extension Economist with Iowa State University. And today I'd like to bring you an update on where USDA sees our crops as they've been out in the fields here in early September, but they're also assessing what usage looks like out there across the globe. And so with the September update, we tend to get a really good snapshot on what's happening, not only within the fields out there, but also within our markets as we look across the globe. So starting with corn, the idea is what we saw was sort of, I'll call it a lot of movement, but in the end, it just confirmed where we thought we were a month ago. When looking at the corn crop, first thing that USDA adjusted this time was a re-update of acreage. We saw planted area for corn being raised by an additional 1.4 million acres. So this is adding on top of what they added in September. We continue to see a lot of, if you will, late reported corn plantings that came in this spring. So that's going to increase production as we look out there. On the other hand, as USDA got out into the fields and assessed the crop, they found that this crop, while still a record yielding crop, is not quite as big a record as we first thought. So they ended up bringing the yield estimate down by 2.1 bushels per acre. That's going to bring the production number down. But in this case, the acreage move overwhelmed the yield cut. And so when we look at overall production, that ended up getting increased by 72 million bushels to bring us up to 16.8 billion bushels of corn hitting the marketplace this fall. This is by far the biggest crop we've ever had. So we're looking at even more production, if you will, headed down the line here. Which then, when we jump down to the gray box, the usage side, we also saw increases there, which helped offset what we're seeing on the supply side. In terms of the biggest movement there, we saw it was in the export line. USDA ended up increasing that number by 100 million bushels. So we're looking at 2.975 billion bushels of corn being exported to the rest of the world. So despite some of the tariff turmoil, the corn export market continues to run at a record pace right now. And so combined with still strong demand through ethanol and a good feed market, you put that all together and you're looking at a record, 16.055 billion bushels worth of corn being used over the coming marketing year. That helped ease the market's concern about this record crop. And in the end, USDA's estimates for ending stocks really didn't move by much. It actually came down by 7 million bushels, but we're still talking about 2.11 billion bushels being set up for as we look at ending stocks come next September. And that allowed USDA to keep its season average price estimate at $3.90 a bushel. Now, when you look at the soybean market, the updates it got were sort of like corn, but much smaller in comparison here. In this case, the planted area did go up, but it was only by 200,000 acres. The yield did come down, but was only by a tenth of a bushel. And yes, the acreage move offset, more than offset the yield move. So production went up by about 9 million bushels. So in this case, we're looking at basically what we had last month, 4.3 billion bushels of soybeans hitting the marketplace here. If you jump down to the usage side, the idea is again, it was mixed. We had the soybean crush number moving up by 15 million bushels, but we had soybean exports falling down by 20 million bushels out there. And so when it was all said and done, in this case, the ending stocks went up a little bit, in this case, 10 million bushels, but we're still looking at 300 million bushels at the end of next September. So it's still a very tight market. But because of that increase in stocks, we did see USDA lower its season average price estimate by 10 cents so that the 2025 season average price matches 2024, $10 a bushel as we look out there. So, looking at the supply side, what did USDA find when they went out into the fields? Well, again, they found a few more fields planted to corn and soybeans, but those crops looking a little bit worse off than they were in August. And that's the thing we have to remember that as USDA is assessing the crop, they're always assessing sort of what's the expected yield as of the first of the month. So the August numbers reflected August 1st. The September numbers here reflect September 1st. And when we get to October, those October numbers will reflect October 1. But in looking at the yields, as we look across the country for corn, we still see very strong to record yields across the majority of the corn belt. But we did see those records get shaved off a bit. In this case, the Iowa yield was knocked down 3 bushels. The Illinois yield was knocked down 2. One of the biggest cuts was in my home state of Missouri, where they were knocked down 7 bushels as you look there. But we're still talking about overall, again, a very strong crop coming down the line. And one of the things I am watching is that we know that there's some disease pressure, say, west of the Mississippi River that's been building, especially southern rust there. When we tend to look east of the Mississippi River, we are seeing more droughty conditions out there. And that dryness we know can have an impact later in the season for yields, especially for a crop like soybeans. Here's the soybean map, and when you look there again, we're still seeing record crops being projected across the country here. And actually, when we look here, it's a mixed bag. We did see USDA strengthen some state yields. For example, Iowa went up 2 bushels per acre. But on the other hand, they're also pulling back on other parts of the country. They took Indiana down a bushel as they looked forward here. And so we did see some problems starting to creep in, but they're just not large enough to really move that yield significantly to harm the production numbers we look out there. So we've got plenty of crop to utilize. Therefore, we need to see a lot of usage, not only here in the US, but globally to help us balance this out. So as we turn our attention to the export markets, as I mentioned, soybeans is where they took a cut in their expectations for exports. Corn got an increase. And that's being reflected in what we're seeing in the early data. We're just in the first couple of weeks here of the marketing year. And already, when we compare soybeans this year versus last year, our soybean export sales are off nearly 34% compared to last year at this time. The biggest mover is the country, if you will, that's missing from this chart. Typically, if you've seen a soybean chart for me like this, you always know that that first bar is China. They have traditionally been our largest market for soybeans. And you can see right now they're not even on the chart because officially, as of this time, they have purchased 0 bushels from the U.S. from official channels going through that. Now, they could be in that unknown destinations category, but you can see even the unknown destination sales are off as we look out there. We do see some growth in some of our other markets, though. Mexico, Taiwan up. It's good to see the European Union up as well. But the idea is with China sitting on the sidelines, at least right now, officially here, we have seen a fairly large drop in early sales to the export markets for soybeans, and that's holding that market back. On the other hand, when we look at the corn market, it has taken off and continued the run that it's had over the past year. We have seen very strong sales across the board. In fact, the only place where the corn market's struggling is a place like China. But those sales are relatively tiny compared to what we see in the rest of the globe. As you can see here, we've got growth in our number one market, Mexico, Japan, Colombia, they're all up. And so the corn market continues to experience very strong export sales despite the tariff turmoil, mainly because when we look at the top countries here on the corn chart, we are seeing the countries where we've got either more trade agreements slash frameworks in place as we've gone through this past year, or we have things, pre-existing agreements like the USMCA and the free trade agreement with Colombia, which are helping hold tariff levels for at least U.S. products steady as we've moved forward over the past year. Now, the other place where, like I say, where we saw significant movement for the crops is on the biofuel side. For corn, there wasn't any movement, but that's because when we look at corn ethanol, it continues to churn at record levels. We're seeing very strong demand there. It's just demand that's stable at best. Where we are seeing the growth is on the soybean side, and I would argue that's mainly being driven by the change in the renewable fuel standard, where the EPA has bucked up bio-based diesel requirements for 2026 and 2027. And that should lead to more crushing of soybeans over the last half of this year, getting ready for that 2026 market. And I think that's what's being reflected now when we look at that soybean crush number continuing to grow fairly significantly here. When we get to prices, the challenge is that both corn and soybeans have been seeing prices below our costs of production. Corn is, I'm going to argue, in relatively better shape than soybeans as we look out there, and the market is reflecting, I would say, more optimism for corn than it is for soybeans. So as we look at the futures at the close of day on September 12th, what you can see here is that the futures market was estimating a season average price for the 2025 crop of $4.30. USDA was at 390. So you can see, 40-cent difference here in terms of the market is more optimistic as they look out for this year's corn crop, despite the record production that we've got. And as you can see, that optimism continues as we look forward to the 2026 crop, where the futures market is already projecting close to $4.70 as we look out for a season average price. So they continue to show strength there. And I think a lot of that is reflecting the overall strength of corn usage that's at record levels right now. It's strong in all of the three major sectors: feed, biofuel, and exports. And so the market says that looks like that demand has long legs, and we're going to see that continue to push prices higher into the future. On the other hand, as we look at soybeans, there's strength there, but not nearly as much as what we're seeing on the corn side. When we look at 2025 soybeans, USDA's at $10. The market's at $10.20 basically here. Looking towards 2026, you see that strengthening up to 10.45. But again, I think that's more muted than what we're seeing on the corn side. Mainly, I would argue, because the soybean market is still trying to assess out here in this case what's really going to happen down in South America. As we look at Brazil continuing to grow larger and larger in terms of global production, they're going to dominate how the market's going to swing here, especially as we see China shift more of its demand flow from the US to Brazil. That means our prices won't have quite the strength that we've had over the past few years. And I think that's being reflected here. So looking forward, like I say, USDA is going to be changing, updating these numbers every month here in November or October and November. Each time they'll be going out in the fields. And so I think that October report will especially be critical as the harvest will be fully underway then. And I think that's when USDA will fully capture the disease and drought pressures we're seeing out there. And so we could see lower yields still as we're looking forward. The question will be, to me, though, what happens on the usage side during that time as well? Do we see a counterbalancing effect here where usage comes down with those yields, or do we see usage continuing to remain strong here, and that could help provide some support to prices as we move through the harvest time? Oh, I thank you for your time spending with me here today. Again, my name is Chad Hart, Extension Economist at Iowa State University.